Welcome and thank you for joining us for today's webinar, How Modern AP Leaders Drive Growth and Value, brought to you by IOFM and sponsored by. We have a few housekeeping notes to go over before we get started. If you have any technical questions or issues using the WebEx platform, please use the chat box and I will respond right away. If you have any issues with audio, please click on the phone above the chat window to teleconference info. For those that do call in, to ensure call quality, everyone's lines have been muted. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. If you continue to experience difficulty, please email webinars@iofm.com and we will respond as soon as we can. We encourage questions throughout the presentation. Please type your questions into the chat box and hit send to them. At the end of the presentation, we will have our presenters answer these questions. We will have 3 polling questions during the webinar. A pop-up box will appear. Please choose from the multiple choice answers and hit submit. We'd love to have your participation and insight. This webinar will be recorded and you will receive a thank you email on-demand material within 2 business days. Our first speaker today is Mark Brousseau, President of Brousseau & Associates. Over the past 26 years, Mark has established himself as a thought leader on accounts payable, accounts receivable, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Brousseau advises prominent end users and service providers on how to use automation to improve document and payment-driven business processes. Brousseau has chaired numerous educational conferences and several industry and boards. He resides in Center City, Philadelphia with his sons. We also have Derek Chang, Senior Director of Corporate Marketing at Salty, a leader in global payment payables automation. Derek leads the development of content and is the co-host of the Business Finance Friends podcast. He has authored multiple white papers and articles in the area of finance operations and is an avid technologist for the back office processes spanning over 20 years. At this time, I'd like to welcome our speakers and hand the webinar off to Mark.
Thank you so much, Jovi, and thank you all for joining us today. So chances are the economic fallout of the pandemic has done more than impact your organization's bottom line. It's probably also accelerated changes in the way that your accounts payable department works. Let's face it, finance leaders can no longer rely on reactive decision-making. Rapidly changing economic conditions and business environments, well, they demand that you have real-time access to data. This is especially true for growth-minded businesses. But with the right technology, accounts payable departments can play a really big role in helping your business succeed, no matter the economic climate. During today's webinar, we're going to show you how to modernize accounts payable to drive growth and value across your enterprise. We'll talk about the changing role of accounts payable, how real-time accounts payable data helps businesses become more proactive, how to create a growth and value-driven accounts payable function, and we're going to provide you with an action plan for putting these strategies into motion. But before we do all that, we wanted to start with a poll question, which is about to be displayed on your screen. We want to know, which of the following is your finance department's top priority for improvement this year? Is it automating? Is it improving data analysis? Is it becoming more scalable? Or is it driving revenue growth? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So Derek, when you talk to finance leaders, what are they telling you is the top of their mind?
I think they start with automation because it enables those other 3 areas. Specifically, if you are a company that is trying to maximize your finance dollars across an organization. There's productivity enhancing automation is really the way to go.
The topic of today's webinar is modernizing your accounts payable operations. I reckon a lot of folks on the line already have some level of technology. They probably live in that great middle, right? A semi-automated environment, maybe some antiquated OCR technology, maybe a portal that they never really rolled out to all of their suppliers. Maybe they have an e-invoicing solution that never quite worked right. The fact is, Derek, that these semi-automated environments probably aren't going to cut it in the future, are they?
No, I think you're looking at whatever you can do to handle the entire workflow. That's the direction, and I think the results from the polls definitely show that folks are more interested in additional automation, even if they have 1 or 2 point solutions in place.
When we talk about data analysis, what is it the CFOs and other finance execs are telling you they're looking for out of their AP departments?
Just greater insight and productivity into what they're doing and more control. I think especially now with everyone remote, it's not easy to walk over to someone's desk and ask them about something. You have to be much more proactive about communication, and ideally you're logging and tracking every step of the process.
How would you respond to the AP leader who says, hey, come on, Derek, I got enough on my plate. I can't possibly be worried about driving revenue growth too.
Well, why are you in business?
And that is the question many organizations are really asking themselves. We asked our attendees, which of the following is their AP department's top priority for improvement this year? 41% of our attendees identified automation as being a top priority. 28% identified data analysis. 17% of you said driving revenue growth. Does any of this surprise you, Derek?
Not really. Although I will say one of the big benefits of automation is the ability to scale at some point. So even though you might not be thinking about scaling because of the current business situation, that shouldn't, if you think long term, if you're thinking a year or two down the road, when hopefully this is over or at least behind us for the most part, you're going to want to scale because that will allow for that revenue growth.
A lack of scalability is certainly a telltale sign of accounts payable technology that probably needs a refresh or an upgrade. What are some of the other signs that it's probably time to modernize the way your accounts payable department works, Derek?
Manual processes, physical processes, paper processes, those are all indicators. And then I would say if you have the benefit of maybe changing up your supply chain a little bit, adding new products or services into your organization and needing new third-party help with that, then being able to streamline those activities. Payables is really kind of the end of the contract, right? So it's the final bit of negotiation with a vendor or supplier, and so you want to be able to close that out properly.
As the results of our poll suggested, the role of accounts payable is changing. The modern accounts payable department is breaking down the traditional boundaries of their finance-based role. They're helping the company at large make better, faster decisions. This comes at a time when businesses are trying to position themselves for a comeback. 46% of businesses say that next to physical health, their number one priority is profitability, cash flow, and financial planning. 2/3 of businesses globally now expect to pursue cost reduction over the next 12 months. That's compared to 38% before the pandemic began. They're looking for ways to free up cash and to become more agile as an organization. And businesses expect their AP department to play a key role in driving growth and value. Over the next 3 years, the percentage of businesses that view accounts payable as playing a significantly bigger strategic role in the enterprise has nearly doubled, and there's no let up in sight. But to become a truly strategic function, accounts payable needs to eliminate repetitive manual tasks and free up the time of their people for higher level initiatives. And this, my friends, requires automation. It is the table stakes. Only 9% of accounts payable departments describe themselves as being fully automated, an electronic, touch-free environment, living the dream nirvana. Once information is digitized and it's accessible, well, now accounts payable can use data to help organizations make more strategic and more informed decisions around growth. Digitization also enables accounts payable departments to grow without having to hire additional staff. Imagine that. And finally, accounts payable can empower other functions and drive revenue at an enterprise level. By taking advantage of technology, accounts payable leaders are taking on the responsibilities of paving an efficient and informed direction forward for their organizations. They are leading the way. Stakeholders all across your organization are counting on you to do all of this. That's right. No more pressure, right? They want you to succeed. Over the past 3 years, the percent of enterprises that are making more use of accounts payable data has more than tripled. You already knew this. You're getting more requests from more corners of the enterprise for more reporting. And there's no end in sight to that. That's not to say, however, that every AP leader has embraced automation. I know there's some skeptics on the line today, and there's 5 big reasons that some accounts payable leaders are dragging their feet on automation even today. Many AP leaders cite a lack of capital budget as the reason they haven't automated. Some CFOs might even argue that now is the time to hoard cash, not to invest it in automation. And while there's no question that resources are tight, the business case for automation is compelling. And what's more, you can have your cake and eat it too. Accounts payable automation provides you with a quick win of efficiency gains while providing you with a tool that can help you better manage your working capital. What's more, the fast payback you get from accounts payable automation can push you to the front of the line when it comes to all those competing priorities in your organization today. Some AP leaders don't think they have the IT resources they need to support an automation project. And there's no arguing, IT resources are strained these days, but cloud-based accounts payable solutions, they can be deployed fast with little IT involvement, no matter where your staff works, and without disrupting existing processes and procedures. And what's more, leading solutions can also be integrated into your legacy ERP without disrupting the way it operates. Some AP leaders might also not be sure how to automate. And the fact is, AP technology is constantly evolving, and it will constantly evolve. So you need to pick a starting point. AP leaders might also worry whether people will even use this new technology. And frankly, this is really a change management issue. Just because your staff has been doing something the same exact way for years and years doesn't mean it's the right way. And finally, some of you may get distracted by your daily routine. You can't get distracted. There's too much at stake. The shift to remote working and the pressures caused by the recession, they're raising the stakes for accounts payable departments to automate, to modernize, adapting manual and semi-automated processes to this new reality. Well, it's been difficult for a lot of you, and it's not going to get easier. AP departments need to find ways to streamline exceptions, increase staff productivity, speed turnaround, reduce errors, and mitigate the risk of fraud. But here's the thing, folks. AP automation can deliver a whole lot more than just operational improvements. It can also provide strategic value to the enterprise through faster scalability, increased cash flow, the opportunity to capture more early payment discounts, extended DPO without impacting existing payment terms, lower cost of goods and services purchased, and even a stronger supply chain, maybe even greater leverage when negotiating with valued suppliers. This is how accounts payable can start on its way to modernizing growth and value. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, how would you describe your finance department's current level of automation? Are you fully automated, electronic, touch-free processing? Are you largely automated and you've got no plans to upgrade or refresh your technology? Are you largely automated, but you're planning to upgrade? Are you partially automated with no plans to upgrade or refresh your technology? Are you partially automated, but you're planning to upgrade? Or are you a paper pusher? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So Derek, when you walk into accounts payable operations, or at least when you used to, what was it you typically found in most departments?
Sorry, I was muted. I think it's usually a mix. Usually you have some paper processes, you have invoices that might come in through mail, through PDF. That's certainly a big step to be able to deal with that and that whole keying in process of those invoices. Then you kind of start to look at the processes around onboarding suppliers for electronic payments. If you want to move that towards that direction, certainly more secure. And then what do you do at when something becomes due? Do you run through a payment run, and what does that look like? So you have to look at the full gamut of the processes, and I think most people are somewhere in the lower middle of automation in terms of what they're looking at or what they have existing, and certainly looking to upgrade.
I suppose someone on the line right now would argue with us and say, well, come on, Mark and Derek, our processes work good enough. Is that all right?
I don't know if you can ever get good enough. It's one of those things that is progressively, you have to take a very progressive approach to things. Certainly a year down the road, 2 years down the road, is this something really you want to do? You're looking also more at employee attrition. Do you hire somebody and their whole sole job is to pay other people? Seems like a kind of a sad job to have. When you get up in the morning, is that really the thing you want to do today as a career? And so I think we see that sometimes. I won't call out IOFM specifically. I'll say some other conferences we've been to in the past. You'll actually attend sessions where it's about how do you move out of payables as a career. It's like, wow, that's really kind of sad.
It used to be that smaller organizations felt left out of the whole automation discussion. Cloud technologies really leveled the playing field. No, it's possible today, Derek, isn't it, for even very small organizations to make a compelling case for automation?
I think so, and certainly, the company is not going to stop. And as the company grows, as it expands maybe into other jurisdictions, as it has a larger supplier base it has to deal with, all those things factor into if you can streamline that process, if you can get better measurement out of that process. In other words, can you reconcile quickly? Can you have a better understanding of what your cash flow needs are, because what you're paying out. That's all part of this process, and it goes beyond just hey, I have an invoice I need to key in.
You made an important point about growth. I know many organizations are looking toward the future. They're preparing for the recovery. They anticipate growing as soon as possible. Is this the time to automate AP, or do you wait until you start that growth curve?
I think you plan ahead. These type of technologies generally have a long shelf life, and if you can implement when things are simple, it actually makes it easier than when you start to add a little bit of complexity. So yeah, there's no better time than the present, as they say. And certainly, as you are looking in a situation where maybe everybody's remote or members of your team can't connect in the normal ways, having a more digital process is probably the best option.
We asked our attendees how they would describe their finance department's current level of automation. More than 1/3 of the folks on the line, Derek, describe themselves as being partially automated with plans to upgrade. Another 19%. So they're partially automated with no plans to upgrade. That means more than half of the folks on the line today are somewhere in that middle. They've implemented some automation, but they presumably still have lots of manual steps. What's your message to them?
Uh, Again, there's technology out there for you that every step that you think you need to be doing manually, there's probably some step that's been turned into software. Software is just another word for an automated process. And so if you can get to a point where you're dealing with the things you need to deal with, that it's approval based, and then transactional monitoring and reconciliation, that seems like a better approach than having to deal with handling manual transactions, even on a digital scale. So sending ACH payments or sending SEPA payments or wire transfers and things like that. Those are not areas that require human beings to be a part of.
Half of the people on the line today have plans to automate their accounts payable department further. And there's no question that automation is dramatically changing the way that businesses operate. As a result, millions of workers, both young and old, may be displaced from their jobs over time. And with this trend in mind, it's important to explore the current state of automation in accounts payable. Now more than ever, AP leaders must step up to help their company achieve sustainable success. Pressure is on accounts payable leaders to make sure that they have the right processes in place before things reach a point where operational performance or cash flow or spend management are hindered. The kinds of things that our business is counting on us to help with these days. Automation frees staff to focus on strategy, not just making sure that day-to-day tasks are handled. Among forward-looking CFOs who automated some or all of their finance processes, more than half of them have eliminated 40% or more of the time their teams previously needed to spend on manual finance processes. Automation works. Many CFOs say their organization also has improved the experience for internal stakeholders and suppliers. Imagine that. Eliminate manual tasks and achieve better experience. Using automation to make finance processes faster and less labor intensive, it allows our teams to spend more time on strategic work like forecasting and cost controls. And as a result, AP leaders can have a bigger impact on the organization. 62% of CFOs stated that they will switch the focus of those employees that currently handle manual tasks that can be automated to higher value work. So this is good news for our teams. This is one of the key results of automation. If a job is eliminated by automation, 77% of CFOs said they plan to transfer those workers to a different department. But we all know not everyone can do more without additional training. CFOs get this. Many of them are aware of this. 50% of CFOs said they would retrain workers with new skills, allowing their organization to circumvent any displacement brought about by automation. Freeing staff to focus more of their time on strategic activities is critical if your organization wants to achieve revenue growth. The AI built to scale study by Accenture shows that if you don't automate, you could potentially be out of business. Accounts payable is a priority if your business wants to drive revenue and value. Let's face it, AP is the most time-consuming function in finance today. So automating it is an essential element of any strategy to modernize the finance organization and focus on enabling business success. There's a lot of interdependent tasks that go into getting our suppliers paid. You need to onboard suppliers and keep the vendor master file up to date, stay in compliance with tax regulations, keep track of approvals for invoices, deal with currency conversion for global payments, communicate with suppliers about payment statuses, reconcile payments. The list goes on and on. Not only are all these manual tasks inefficient, they are also add risk to the process, risk of human error, risk of being out of compliance, risk of failing an audit, risk of healthy fines and penalties. And size further complicates matters for many businesses. Finance challenges become even bigger as you grow. This is why Derek thinks it's so important to plan ahead. Complicated global and M&A business structures are really the norm. Even today, there are plenty of companies with international divisions, acquisitions, subsidiaries, brands, even entities. Many of these companies have disparate finance processes that they must manage, just like the company pictured on this slide. Now, some might think that the way you do things in one geography is okay across the world, but you can't expect one geography's solution to be an adequate solution for all of your subsidiaries, acquisitions, brands, and etc. So what happens to your finance processes then? Well, in a nutshell, they're a nightmare. Businesses with multiple entities have many different systems to integrate, complex processes to try and navigate and manage, and far-flung finance teams working in each entity. Just think for a moment about all the time it takes to pay your suppliers for each of these entities. Long before you even get to making a payment, you're struggling to collect, validate, and track banking information and tax forms for all the suppliers in each of these entities. Think about all the resources required to make payments in local currency, logging into multiple bank portals, managing multiple bank relationships, paying multiple bank fees. Think of all the payments that you've got to reconcile and the hundreds of spreadsheets to do it at each entity level. And then guess what? You're going to do it again at the headquarters level. And many of you don't even have complete integration from each of your entities back to the headquarters to roll up values for financial reporting and to close your books. So that means that generating reports to see the total view across all your entities is probably being done manually. And that's time consuming. And it's exposing you to an awful lot of audit risk. AP departments need to stop wasting so much time on manual tasks. Nearly half of CFOs said their finance teams spend 5 to 10 people hours per week on accounts payable related tasks. These manual tasks include things like data entry and supplier inquiries and shuffling paper and matching invoices to POs. We all know the drill. All told, up to 520 hours are dedicated to these tasks every year. 520 hours. Over 1/4 of businesses are dedicating 10 to 20 people hours per week on AP related tasks. Now, that amounts to more than 1,000 people hours annually. We are always wondering why we don't have enough time to do strategic tasks. Here's your answer. Only 4% of the businesses surveyed said their team spends fewer than 3 hours on AP related tasks per week. Folks, this really illustrates the need for accounts payable automation. But it's not just a loss of time that's really costing our departments. There's some real financial consequences to all these manual tasks. Think about this. According to the U.S. Bureau of Labor Statistics, hourly earnings averaged $29.37 in June. So if you take those tasks like invoice management and bill processing and payment reconciliation, based on the benchmarks I just gave you on the previous slide, businesses could be spending anywhere from $15,000 to $30,000 every year per FTE just on these manual tasks. It's critical that AP leaders take a big picture approach to automation. Often, AP automation is just boiled down to the ability to save costs and eliminate manual processes. But as Derek was suggesting, AP technology reaches far beyond electronifying our paper pushing. Most of us seek improvements in efficiency and control and processing times and visibility. Yeah, you're going to get all that from accounts payable automation, but you're going to get some real transformative benefits in the bargain. Before I tell you about those, it's time for our next poll question, which is about to be displayed on your screen. We want to know, which of the following do you believe is the most compelling benefit of AP automation? Is it better supplier management? Is it streamlined tax and regulatory compliance? Is it easier invoice management and reconciliation? Or is it more cost-effective global payments? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. Many of us think about AP automation simply as a way to reduce costs and eliminate manual tasks. How, though, do you factor in some of these big picture benefits into a business case, Derek?
So I would definitely look holistically. A lot of times you are jumping between all of these factors, and when you can take a much more holistic process and build it into a streamlined event in terms of payables, that's the smoothest way to do it.
Many AP leaders have complained for years that their proposals to automate accounts payable have become stuck on senior management's desk. Are including transformative benefits like the ones on this slide a good way to shake those proposals loose?
I think so, and certainly, if you want to become best in class, if you want to propose best practices within an organization, again, it's thinking holistically, being broader about what you're trying to solve. I think most people, when they do think AP automation specifically, they're thinking invoices. But in order to get to that reconciliation part of it, you need to be able to do some of the other stuff that's on the poll.
We asked our attendees which of the following is the most compelling benefit of AP automation in their mind. 2/3 of the folks on the line think it's easier invoice management and reconciliation. 13% identified more cost-effective global payments. 10% said better supplier management. Come on, Derek. I believe that supplier management has got to be really a big priority for businesses these days. Our supply chains over the past 11 months have been stretched bare. Can't AP automation help do something about all that?
Certainly, I think being able to deal with the communication back and forth rather than exchanging emails or asking for tax forms or even just dealing with supplier inquiries about, hey, where's my invoice in the payment stream, and am I going to get paid this week? I think suppliers now are much more sensitive in terms of that. Certainly, if you say want to move somebody into like a net 60 situation, you need to have a very strong relationship with that supplier in order to do that, so they know, how do we cope with the fact that we don't get paid for 2 months. That is part of that relationship, and you don't want to lose a premier supplier these days, because it's everybody's kind of scrambling for those kind of resources. You definitely need to have a strong relationship there.
I was recently asked by an AP leader whether suppliers were having portal fatigue. Is this something that you've heard of being a malady among our supplier community?
It comes up from time to time, but I think they would rather have a portal than have to email, all their different vendors or all their different customers.
They don't want to call or email too. Well, when we think about the transformative benefits of accounts payable automation, to be sure, it all starts with supplier management. On-demand self-service supplier portals, well, they accelerate supplier onboarding, they mitigate payment errors, and they improve communications with suppliers. And all of this reduces supplier inquiry volumes. And then, yes, it strengthens your relationships with your suppliers. It helps you retain key suppliers and attract valued suppliers. Automation also makes it easier for AP departments to manage and reconcile their invoices. Paper invoices are converted to an electronic format, either through OCR data capture technology or through an e-invoicing solution. In an automated environment, far more invoices are posted directly to an ERP or an accounting system without the need for any of your staff ever having to touch them. And in cases where an exception or an invoice requires review, digital workflows route invoices based on preset business rules, and automated accounts payable solutions reconcile invoices in real time so that there's no more month-end monotony. Automation also assists AP departments in tax and regulatory compliance. The technology gathers all the right tax forms and tax information from your suppliers before they're ever paid. No more chasing them down. Automation ensures that the payees provide the correct documents. It validates the forms and information for accuracy and for completeness, and it calculates tax withholding when applicable. And finally, automation provides a single platform for multi-entity companies to do business globally. The technology streamlines payments across borders with support for different payment methods and different currencies based on the country. AP already is under pressure to deliver real-time visibility to stakeholders. Over the past 3 years, there has been a nearly fourfold increase in the percentage of AP departments who say that demand for real-time visibility is significantly higher. This is the type of automation, transformation that automation can provide. If you find these types of benefits compelling, well, here's the thing, you're not alone. But you might be wondering how your AP department can build a tech stack that delivers these outcomes. The ultimate tech stack, of course, is going to vary depending on your business's maturity, your core strategic priorities, and the organization and business model's complexity, right? The multi-entity versus single entity. You might also have to consider where your business aims to be in a year or two. These should be foundational technologies that you're deploying, not ones that you're going to replace after a few years. Plus, there are other vital factors to consider, like global expansion and multi-subsidiary structure, and whether or not you have a lot of international suppliers. You also want to be sure to focus your efforts on the most time-consuming accounts payable functions. So you've got to evaluate your pain points and set priorities. In most finance departments, we all know that accounts payable is a very burdensome activity, but all of these components of a tech stack don't mean that you should stop there. You also need to have several key building blocks when it comes to choosing a tech stack for accounts payable. The most crucial aspect in evaluating these technology solutions is ensuring accessibility. Does it have a modern infrastructure? Is it available 24/7? Is it 100% cloud-based? Is there artificial intelligence and machine learning built in? Does the solution have robust global capabilities? If you're going to have employees all around the world, you're going to need real-time visibility to scale effectively. It's also essential to find an accounts payable solution that integrates with whatever ERP or accounting system you're currently using. You want to find partners who've already deployed solutions in your ecosystem. You don't want to have a poorly integrated solution. Otherwise, you'll never get that 360-degree visibility. You'll end up with back and forth emails and lots of manual keying. The right tech stack should also put cash controls at your accounts payable team's fingertips, real-time data around crucial business metrics. It informs and it accelerates decision making. You can use this data to quickly model financial plans that reflect whatever's going on in your industry or in the business environment. What's more, real-time visibility into all supplier expenses can help your senior management stay on top of costs. We know that 2/3 of businesses plan to reduce their costs as a result of the economic fallout of the pandemic. The problem for many businesses, they have such lousy visibility into their spending, they don't know what they're spending on or who they're spending it with. So what happens? They cut costs indiscriminately. When it comes to accounts payable, your tech stack also should include 100% cloud architecture, digital approval workflows, support for electronic payments, on-demand supplier onboarding, a consolidated financial view, complete data visibility, real-time integrations, and multi-subsidiary capabilities. With this type of a solution, now your staff will only need to intervene when absolutely necessary. And this is going to free them from time-consuming tasks such as data entry and shuffling paper and chasing down information. And that's going to allow them to focus on higher value activities that drive growth. Things like data analysis and supplier management and vendor master database cleanup. And the result is a process that can scale along with your business. Now, the perfect AP tech stack should also incorporate strong financial controls that help prevent fraud, tax, and regulatory and audit risk. Regularly evaluating your financial processes will certainly help you uncover potential vulnerabilities. But you can take it a step further by modernizing your operations to provide automated controls, multi-factor authentication, IP restriction, data protection and encryption, role-based security, audit trails. These are all the types of things you need to ensure control over your operations. You also want to look for a solution with KPMG certified tax compliance and EU-US Privacy Shield protection. What's more, you want a solution that's automatically going to screen your suppliers against watch lists such as OFAC so that you can proactively identify bad actors and avoid getting into trouble. Best-in-class AP departments already have taken steps to deploy the type of tech stack that I just described. They're ditching paper processes, they're eliminating manual tasks, and they're enhancing decision-making by using automation. And this can help you achieve not only short-term benefits, but help you gain longer-term strategic advantages. It enables you to effectively modernize your operations so that you can maximize efficiency, so that you can accelerate business visibility, enable adaptability so that you can meet changing business needs, and so you can institute smart financial and cash controls. Now is the time to modernize accounts payable. The right tech stack can deliver those productivity improvements you're all after while strengthening cost and working capital controls that can help you achieve growth and value. This is appealing to more and more departments. And what's really appealing is that these types of modern solutions can be up and running quickly with little upfront cost. And that's exactly what your business is looking for when it's trying to grow. So you might be wondering, how do I get started? What's the first step to creating this future-proof AP department? Well, to tell you more about that, I'm going to hand it off to Derek. Derek?
Hey, thanks, Mark, and thank you for IOFM for this opportunity. It doesn't seem like we should be celebrating in this era, but actually, I think there's some room for celebration, certainly for the finance organization, because it's finally getting some of that technology love that other departments get. We're kind of in a unique time for financial organizations. While we're in this kind of black swan event, working from home, kids are going crazy, we're getting cabin fever, and this one silver lining to all of this is that it's essentially forcing us as businesses to look at paperless and officeless finance, to make that a reality. And technology is really modernizing how financial operations is removing those gaps in terms of communication and transactional approvals. Yeah, this is what strategic high velocity finance teams are looking for. And so it's an exciting time to kind of circulate around that. At Tipalti, we work with over 1,000 companies. I think the last count that I saw was 1,430. So many are likely brands you recognize. It's really cool to be listening to podcasts these days and hear an ad from one of our customers. Usually those are high velocity companies. They're interested in growth and kind of taking advantage of a time when they have that opportunity to scale. And these customers stick with us. We have a fairly high retention rate in the industry. And even last year, we were able to close a $150 million round of funding in the pandemic, and we reached a $2 billion valuation for Tipalti. And I think what that indicates is that the industry and our customers recognize how vital payables automation is to keep their business running. You look at ERPs and spreadsheets. Payables automation is now essential as a part of that financial operational infrastructure. And CFOs and controllers really use us to pay thousands of suppliers worldwide in a matter of clicks. It's all secure and accurate and auditable. And that's a astounding achievement, I think, for kind of like the future of financial operations and accounts payable. So it's exciting. It's an exciting time. And one cool fun fact, our customers, fewer than 5% of our transactions that we do for them are paper check, which is dramatic. I would say, all the other methods are electronic, which are essentially pandemic proof. They're accurate, they're auditable. You don't get bounce checks coming back. You don't get checks that get returned in the mail coming back to you. You don't have to deal with that kind of additional manual process as well. And is there really a finance leader who is not looking to optimize their headcount? Finance has to set an example for the organization around efficiency and accuracy. So do they choose to spend on somebody who is, you're paying somebody to pay other people? Or do would you rather hire on an analyst or someone who's much more strategic? Or maybe you have team members you want to up level into different areas of accounting and finance. How do you do that? You essentially take the workload off their table. Most people think of invoices when they think of payables, and obviously it's the most painful process of the most painful process. So, what surrounds that process, and you're thinking about OCR, but are you also just covering one small aspect of the payables workflow? Tipalti provides one holistic system, and it institutionalizes best practices around financial controls at the most critical points. So when invoices are approved, when money leaves your company, these are the most likely areas where you're going to get errors or problems. And so Tipalti is really a scalable system, removes all those operational gaps. It's holistic in nature, and we consistently remove about 80% of that payables workload. So not only from an invoice standpoint, but how do you do onboarding? How do you do supplier communications, tax compliance? How do you offer up an early payments program, or send wires or send SEPA payments out there? When you factor in all those things, we're removing 80% of that entire workload. And because of that, because it's all one single stream automated process, you're also looking at very accelerated reconciliation directly into your ERP or accounting platform. And so there's no more what I've been calling spreadsheet gymnastics or spreadsheet du soleil. You don't have to tweak yourself in order to get that data into the system, a system of record. So, Tipalti is really positioned for the payables challenges you might have today, but it also, readies you to scale and grow tomorrow. So thank you for your time. So back to Mark.
Thank you so much. And that will bring us to the Q&A portion of today's webinar. If you haven't submitted your question to me, or if you've thought of another question for Derek, go ahead and use the Q&A tool on your screen to send them to us. Now, Derek, one of our attendees wants to know more about Tipalti's supplier onboarding process.
Sure, I can talk a little bit about that. So we have a built-in supplier portal. It's intelligently linked to basically banking data. You supply your normal, you basically choose what payment method you want. Wire, paper check. We actually will do a paper check. It's not looked upon as a favorable thing. We actually support PayPal as well, and ACH. If you're in other regions, for example, in Europe, we actually can make SEPA payments as well. So it's all kind of connected, and we essentially have built-in intelligence into the portal, which allows for that selection process. So it kind of guides the user, and then they can upload an invoice and basically track the payment from there.
Another attendee is wondering about the type of reporting that an automated solution can provide to senior management. For instance, does it provide accrual reporting, spend management reporting?
Not directly. However, because we are providing all the vendor payments or supplier payment data, in addition to any foreign exchange that's coming through in terms of fees, transaction fees, any kind of scheduling that way, and then it gets automatically populated into your ERP. That's fairly seamless. So then you basically don't have to worry about the vendor payment side of the business.
Another attendee is wondering what sort of bank verification is done to prevent against fraudulent setups.
Yeah, in fact, that's a great question. We provide, we are ourselves a money transmitter. We own money transmitter licenses for every state that requires them. We are adhering to OFAC directly. And so we run checks for fraud. If you have two people asking for invoices, or you have two people asking for payment, but they live in the same address, that's something that gets flagged. We're monitoring on the blacklist from OFAC. We're monitoring for, we have got some heuristic checks for around addresses and bank account data and things like that.
One of our attendees notes that their AP staff is working remotely. How would this solution be deployed, and how would our staff be trained in this environment?
Yeah, great question. I mean, we're designed cloud first. In fact, it's the only way you can get Tipalti. So it's essentially remote anyway. In terms of like implementation, we've got a great implementation team that just will support that process. And then as far as training, it's very little training, actually, surprisingly. You have training for, the controller level or the AP level, just so they know where invoices and bills come in, how to route approvals, how to schedule payments. But essentially, that's about it. Um, I'm being kind of facetious about it, but essentially that's the day-to-day stuff. And then, as far as like your approvers within the organization, it's also very simple. You get an email from us when you have an invoice that you need to approve. You click on approve or dispute or reassign to a specific department, and then that's essentially it.
Another attendee is wondering about ERP integrations. How hard is it to integrate this with an ERP?
Yeah, it's a great question, very common one that we hear. ERPs are amazingly complex systems of record. We have a direct integration with Intact and NetSuite, NetSuite One World specifically, as well as QuickBooks Online. And then we are rolling out additional ERPs. I think we'll support Microsoft, GP, that's whole series. We're getting support for QuickBooks Desktop. It's a long list. I can't go through them all, but essentially our approach is, whatever the ERP is, then we can provide an integration point to.
Another attendee is asking what kind of ROI can they expect with a solution like this?
That's a great question. I can't really say for other companies, but we typically associate ROI with operational costs. A lot of times that's human labor and workload. Our customers typically report about an 80% reduction in workload. That's the entire payable cycle, as I was mentioning. But I've also seen reduction go as high as 90%. If you're making payments globally to thousands, you can do it in a matter of minutes. And again, all that is reconciled back to the ERP. So you're literally just approving invoices and payments. You're not keying them in. You're not validating the payment details. You're not logging to your bank. Your CFO, you don't have to drive checks to your CFO or controller to sign and mail things out to vendors. You don't even have to log into a bank portal. So it's all kind of encompassing. So it's like rather than one specific return on investment, you're looking at a lot of little pieces that come into play.
Another attendee is wondering whether smaller suppliers are more open to accepting electronic payments these days.
I would say all of them are. I don't think that there's one that wants a check. So, unless they are in a situation where they themselves don't have a bank that they can immediately go to. Most people want to have an electronic payment. It's faster, it's more reliable.
Another attendee is wondering about what tools you have to ensure approvals keep moving. Do you have alerts? Do you have escalation procedures?
Yeah, great question. We have situations where we can auto route based on how you can assign, like, let's say you're going on vacation, there's a whole assignment process there. We can also alert based on, hey, you haven't responded to this request. If you are somebody who has a lot of things to approve, like let's say you're a controller level or something, then they can actually log in and get the entire list that way and do it that way. But most people one-offs like myself who might be purchasing something that needs to get approval, I get an email and I just I get the email. It's got the attachment of the invoice. I just click on how I want to how I want to deal with that invoice, and then I'm kind of done. It takes literally seconds.
And that will be our final word. Derek, thank you so much for an excellent presentation and for sharing your insights today. And thank you all for taking time out of your busy days to join us. And with that, I'm going to hand it back to Jovi. Ms. Jovi.
Thank you, Mark. That's all the time we have for today's program. I have a few housekeeping notes to go over before we officially close out. You could please fill out the short evaluation form that will appear once you close the webinar. This will help us better serve your needs. As a reminder, the on-demand materials will be emailed to everyone within 2 business days. This will include a PDF of the slides as well as a link to the recording of today's. Thank you again to Mark and Derek for the great presentation today, and thank you all for attending our webinar today and taking times out of your busy schedules to join us. This webinar was brought to you by IOFM and sponsored by Tapalti. All and have a great